Hello everyone, I'm Nelson again and with my partners Margery. So let's
Oh,
recap what we discussed last time. We talked about the relationship between fund manager and fund administrator. And today we are mainly talking about the components of NAV and pricing error. So first of all, Margery, do you know what's NAV
yeah,
stand for?
sure. Of course, I know what is NAV. Being in the fund industry for so long, if I say I don't know, then your
Okay.
question, what did I
Yeah.
do? Anyway, I actually asked AI what NAV is about. So I asked what
Mhm.
is net asset value, and then what it said is like net asset value is a key financial matrix used to
Mm.
determine the value of an entity's assets minus its liability. It's most
Mm.
commonly used in the context of mutual funds, exchange traded funds, and investment trusts to represent the per share value of the fund. What do you think?
Okay, so yeah, it's correct. That's correct. But if I'm not coming from the same background, then maybe I'm a little bit confused. What are you talking about? Like, what is total asset? What is total liability? And then what is outstanding share? I'm a bit confused. So let me explain a bit more about what is total asset first. Now, total asset, if you let's put it this way. For your own account, your personal investment, you have cash,
Mm.
you have some equities, for example, stock like, and then you have some maybe perhaps your property as well. These are so-called asset. So this asset minus liability. The liability is what, so example, those fee payable, like you need to pay the utility bill, water bill, gas bill, electricity bill. You have received the bill, but you have not paid out from your own pocket. That so-called fee accrual is part of the liability. So imagine that total asset minus the total liability is your net asset value. So I think this is more easy to understand for non-financial service professional, I would say.
Yeah,
Do you
I
want to
agree.
add anything? Do you want to add something for total asset or total liability in order to come up with the net asset value?
No, I think your definition is very clear, but in the
Yeah.
context of fund, so what let asset value as well? I think let us think about that for an investment fund. What do you think is the most important component?
Well, for a fund itself, I think 90% of the value is coming up from the security because yeah, a fund, the main purpose of a fund is to gain the return, gain the investment, accumulated return. So 90% or above in the net asset value is coming up from the security value. When we say security value, it can be equities,
Mm.
it can be debt security, for example, bond, or it can be time deposit, some derivatives investment as well. So these are the main component of the asset. Yeah, and then of course there's some cash. Otherwise, if the investment value is more than 100%, which means the fund potentially is in overdraft or overinvest. So it is not very common in the fund. So it will have some surplus in the cash account, like
Mm.
or 2 or 3% cash buffer. And this is for any sudden payment or for any future expenditure like.
Yeah. So let's start from cash. So you mentioned about
Mm,
cash, Nelson. So I think you and I, we do have cash, but in terms of location, you're in Australia and I'm in Hong
right.
Kong. So you're using Aussie dollar and then I'm using Hong
Yeah.
Kong dollar. And then what if you and I have a fund and then we use US dollar, denominate in US dollar? So what should we
Mm,
do when we do the valuation? So you want to use Australian dollar most. So you want Aussie dollar, and then I want Hong Kong dollar. And then in terms of trade, we will have a lot of trade in AUD and then a lot of trade in Hong Kong
right. Right.
HKD. So what should we do?
Now, so it really depends on the fund manager itself. If the fund is mainly trading in Aussie market, and the fund is based in Aussie dollar, then of course most of the cash will park in Aussie dollar. But if the fund is, for example, is investing globally, then it will have more than one currency, obviously. But ultimately, most of the cash will park in either US dollar or Aussie dollar, depends on the fund-based currency. Because as I mentioned earlier, the cash is mainly used not just for security trading, but also for fee payment. And then for fee payment, if it is an Aussie fund, most of the fee payment are in Aussie dollar. So eventually, the fund manager will used to keep more Aussie dollar in the cash balance. But where it's in Hong Kong, I think fund manager tend to park their cash in Hong Kong dollar or US dollar. Yeah, because yeah, because the fee payment used to be in those two currency. Yeah.
Yeah, exactly. So what if we also have like another party and then he prefers US dollar? So we probably say, for example, we use the fund will be determined in denominated in US dollar, and then we need to convert the AUD into USD, also convert HKD to USD to have a common picture in one single
Yeah.
currency to represent the asset value. So
Right.
it will be
Correct.
easier for us to understand as well. And so for example, let's use 11 a.m. Aussie Melbourne time to take the snapshot FX rate for us to do the calculation. Then it will be easier for us to understand what the NAV is about. So this is how we come up with the NAV for cash. I mean the NAV component for cash. And then how about
Yeah.
other assets?
Now, for the other asset, if, for example, the fund is only investing in Aussie market and the fund base is in fund-based currency is in Aussie dollar, then it's very simple. There's no exchange rate involved. So wherever the stock value in AUD, that is part of the component of the NAV. But what if the fund is investing in multiple different markets? Like, for example, US dollar, Hong Kong stock market, US market, or even some of the European market, then that involve local market value and base market value. So the local market values, for example, Hong Kong stock, the local market value is in Hong Kong dollar. But however, the fund is based in, for example, Aussie dollar, then there will be exchange rate involved to convert the Hong Kong dollar market value into the Aussie market value. So at the end, we have to make sure all the stock are in the same base market value. Then all the stock base market value adding up together come up the total base market value of the investment. Because we cannot add a US dollar stock local value to Aussie stock value. That's not apple to apple, right? So we have to make sure all the stock are on the same currency in order to adding up together to come up the final NAV. Yeah.
That's right. So that's the reason why you always hear us saying the base currency or the fund
Yep.
currency, or just like I just said, denominated in US dollar. So this is like
Right.
interchangeable terms that we commonly use in the fund industry.
Yeah, that's correct. Yeah. Yeah. And then yeah, so not only asset but also liability. Some of the liability perhaps is in non-base or non-fund-based currency. We also have to convert to the fund-based currency to determine the total liability. So at the end, the total asset minus the total liability equal to the total net asset value in the fund-based currency. That's
Yeah.
how we come up the NAV.
Yeah. And then it just said per share. What per
Right.
share mean in NAV?
Okay. So from fund manager perspective, I think they don't really necessary to calculate the unit price per share because they will just calculate the we so-called the upper level, the total net asset value. Now for the per share, each fund, for example, a unit trust or mutual fund, there's outstanding shares issued to the public, right? So that's involving subscription and redemption. So that's part of the we call unit registry or investor service. They handle the client subscription redemption. So if there's additional subscription, then the number of share will be increased. Well, if there's redemption, the number of share will decrease. So the NAV divided by dividing the total share outstanding, that's equal to the NAV per share, which is the unit price. And that unit price is used for making subscription and redemption by the investor. Maybe we can talk about a little bit more in the following episode on how to do the subscription redemption. What's the role and responsibility of the investor services, or in Australia we call unit registry.
Yeah, I agree, because it sounds like a very big topic when we talk
Yeah,
to
it's
investor
another.
service. Yeah.
Yeah, that's right. That's another function within the fund administrator. Yeah, so we can touch on that part later on. Yeah. So now,
Actually,
what about we move on to
sure.
another part, pricing
Mm,
error. I
mm.
think from fund administrator, do you come across any pricing error or any serious pricing error that you need to report to the regulator or put on incident report to the trustee or to the fund manager?
This is the things that we always want to avoid, to be honest. When it comes to passing error, people will be so scared. Oh, what happened? What happened? What happened? So usually, when say for example, when we identify something maybe won't in out that as a value calculation, we will first of all inform fund managers. Mm, listen, sorry that we found maybe a pricing error. So we will inform the fund manager, tell the client. At the back, we also need to validate, is it a real pricing error or something else? So lessons, I think fund managers will also do the same validation to ensure everything is correct, is a false alarm or is a real pricing error. So pricing error will happen whenever there is, for example, incomplete record. So we miss something, we didn't record. For example, there should be an asset within the total net asset value in the portfolio, but we miss out for whatever reason. There are 1,000 reasons that we could miss out an asset in the portfolio. So we miss out. That's one. And the other thing is corporate action. Whenever there
Mm,
is corporate action, because we base upon the market data vendor to provide us the information or the sub-custodian. We can talk about sub-custodian later on, but those the party we rely upon them to provide the data for us in terms of corporate action. So what if we have a time lag in terms of the corporate action information? Then we might come up with a pricing error because we forgot or we didn't include that corporate action into our NAV calculation.
That's a very common issue we faced before. The corporation that fund manager expect to be included, but fund administrator for whatever reason they didn't include it. So this may need to be compromised by both party and then see which party is the correct. Yeah, and whenever there's any pricing error, does it need to be revised, or if not, then what should we do next? Because some of the pricing error may not need to be revised because it didn't hit the threshold, or there's maybe no subscription redemption for the day, so not necessarily the great price. But at the end, from fund manager perspective, we will still ask the fund administrator to provide us an incident report document, why this error happened, is it a system issue or human error, and then how to prevent going forward. And then I think from fund administrator perspective, they will also maybe provide lesson to their team member because the error maybe the other will come across again in the near future. So they will have a lesson learning for the rest of the team to avoid the same happen again. Yeah.
You bring up a
So
very
yeah,
good point, Nelson. Yeah,
yeah, yeah,
we need to do a lot of training to our team. So whenever there is pricing error, so first of all,
right.
what we do basically we will do investigation. So investigate the reason why. You know, nowadays we rely on the system to do all the
Mm,
things for us, right? So normally in normal circumstances, it would be quite rare for us to miss any transaction because everything actually straight through. So you put onto the system automatically upon the manager's instruction. So when it happens, it must be something new. For example, investing into a new market and the system is not yet updated to cater for that market, for instance. So in between, we need to do some manual work, many intervention to put up the transaction onto the system. So that will trigger the pricing error. That's one. And the second one is the corporate action. So corporate action, we do have different sources, like I said. So what happened is we do not have that corporate action in our data feed. So that's why we miss out. But then is there any other check we can find out? Yeah, for sure. We do some diagnostic check. So reasonable check to check each part component movement. So for example, the price actually will drop after a stay, right? So we do a stay calculation. That part is quite complicated. We will talk about it in later episode. It will be advanced level. So we'll talk about that. So after a stay, the price will change. So the change will be quite matched with the dividend we're going to receive, for example, for cash dividend, right? So there should be a catch up. So in case there is price drop, and then we do not have a corresponding dividend book as a receivable in the NAV, then we'll trigger the pricing error. So should there be any way that we can look at? Yeah, because like the price change, we need to explain the reason why there is such change. So if we miss out that checking, then it will be a pricing error. So we talk to the manager, okay, it's a pricing error. So we need to recalculate the price and then come up with the impact analysis. Just like what Nelson said, the threshold. So what is it hit the threshold that we need to, do a lot today in the compensation part? I think in any case, we need to compensate the investor.
Yeah.
The thing is, like whether it's a huge or big one, then it will mean that whether we need to further escalate to the regulator, which is we don't want to. So if it's a small one, then we might not need to.
Avoid,
Yes.
Yeah, we want to try to avoid to the regulator or try to avoid any compensation to the investor because it will be so-called this disaster and a nightmare to recalculate the impact and the compensation. So we will try to avoid it, but in some case that cannot be avoided. Yeah, so we have to be prepared in advance if there's this situation. Another common pricing error I come across is for example, whenever the fund, as you know, there's some sort of fee accrual on daily basis, and then when I say fee accrual, because we anticipate or we expect there's some fee payment in the near future. So when the invoice arrived, so we have to make the payment. The fund administrator somehow maybe forget that there's a fee accrual in the fund, and then they will simply deduct the cash balance without offsetting the accrual. So this will also lead to another pricing error. So this part I think is still a bit manual nowadays because the fund administrator needs to very detailed mind and remember that what sort of fee had done the accrual which the sun and then they have to process the manual entry to offset the accrual instead of paying from cash directly. So this part, I think we can explore in the future how we can automate the process because the fee nature it's not that easy to identify whether it's paying out from the fund or paid by the fund manager or the other parties. So I so-called this is the most common pricing error I come across because as you mentioned, for the other system is very advanced nowadays. It is very rare that it will miss a trade or it will incorrectly priced. It's very rare, but some of the manual process is still very common to leading to pricing error. So we have to think about how can AI, for example, helping us to avoid this error going forward.
Yeah, I think going forward, we really need to see how AI is a tool to help us how we can do our things better. So for example, like I said, right, we do have a lot of diagnostic check to ensure
Right.
the NAV we strike is correct run, is a
Mm-hmm.
fair value. The thing is like going forward, should AI could help us further to I can't say fully eliminate, but help us to
Right.
prevent most of the potential Python error. I think this is a
Right.
really important. It's like how we use a tool is important,
Right.
right? When people say, "Oh, will AI replace me?" So we should think
Mm.
differently. How AI help us?
I think the AI cannot. Yeah, we can talk about this on the next episode on how
Yep.
can AI help us, not replacing us. I think AI cannot fully replace a human, but how can AI helping us to make our life easier?
Mm.
That's a very interesting topic. So we may probably touch on this next time. And I think today is time to finish off. Yeah,
Yep.
so let's catch up again next time, Margaret.
Sure. Okay. See you
All
all
right.
next time.
See you next time. Bye
Bye
bye.
bye.